Good afternoon traders, and welcome to this live Axia stream where we're going to be reviewing the performance of our elite Axia trader over the July FOMC. Now, I've already done a debrief on what we could take from both the headlines and what Powell said during the press conference. So really today I just want to drill down on the execution. I want to spend as much time as we can do in the ladders. So I recommend to you to go back and watch the debrief, which will be put up on the website, or already is up on the website, just to give you a bit of a deeper kind of insight before you see this, because I'm not going to talk too much about the reasoning behind why he took individual trades. It's more about his execution and how he manages them as he goes along. But got some really outstanding performance for you to see, really evident of this trader pushing like leaps and bounds ahead of where he was, say, this time last year. And we're going to see him participate in a number of different markets. So there's going to be a lot going on, and just ask you to bear with me, and I'll try to draw your attention to the kind of key ladders where he's executing in. So these are the same slides as what you'll see on the debrief. So very quickly, the broad expectations of the July FOMC was that there's going to be a 25 basis point cut. They were going to halt the runoff of bond buying, and they were going to signal between 1 and 2 further cuts in 2019 while maintaining act as appropriate, which effectively says that there was still room to deliver more cuts as opposed to a one and done scenario, which would be deemed as quite hawkish. So not going to look too much at the daily structure, other than mainly just referring back to the SPU. Again, I referred to this a lot in my debrief. SPU had quite a good technical structure for a big down move, and this is evident from what we saw as we kind of see this come out. So this is the screen dump that come through at 7 o'clock. So I'm going to focus on two areas mainly today. Firstly, how he executes on the 7 o'clock screen dump, and then secondly, how he executes on the first proportion of the press conference, where Powell delivered just a couple of key lines which really turned the market over. But just in relation to the screen dump, what we saw was it was delivered largely as expected. It was a 25 basis point cut. They kept act as appropriate, but they didn't really over deliver. And the fact that the market was so bid at this time on the potential of, expecting a potential real dovish tilt, or potentially a 50 basis point cut, which, although the Fed had largely thrown water on that, the market's still kind of considering that these things might come into play. So the fact that everything came in line, what we're going to see is a bit of a kind of dovish disappointment trade, i.e. the market's been held up on this dovish expectation. When everything comes out as expected, we see a bit of a release of the downside into the press conference. So as you'll all recall, for FOMC, the three main markets that we look at are the T-notes, Euro, and the S&P. And these are all positively correlated on the back of, if you have a dovish Fed, you will see rates being lowered, which will push bonds higher. You'll also see a weakening dollar, which will push the euro higher, and off the back of that, you also see equities being lifted as well with a weaker dollar. So we're looking at positive correlation across the three main areas, and also we're going to see him executing gold. So that's a fourth market that I don't particularly trade that much myself, but again carries a positive correlation with those. So in essence, if it's dovish, everything should move up, and if it's hawkish, everything should move down. So just having a look quickly, this is the 2-minute chart. Ignore the fills on there, these are mine, so nowhere near what we're going to be seeing him doing. But the first part of the recording that we're going to see is on the 7 o'clock, and it's shown in these three areas in the T-notes, the SPU and Euro. And effectively, we're going to see how he executes this initial splashdown before the market bids back up and comes into balance, leading into the press conference. So I'm going to crack on and get to that right now. I want to play this forward in real time, so we're going to watch about 5 minutes of footage. And just to draw your attention to the main markets he's executing in now, This is gold. Now we'll see him executing quite heavily throughout this press conference and the headlines as well in gold. Now, it's not a market that I trade, but I believe the structure was kind of similar to SPOO in that it had quite a bit of downside potential. So that's what he enters in predominantly on the kind of dovish, under-delivering of the dovish expectation. So we're going to see him sell gold and then also participate in SPOO. And just for your reference, we have euro here and also the Bund here and the T-notes here. So I know there's a lot going on, but it's kind of hard to dumb down what this guy's doing because he's trading multiple markets, multiple correlations at the same time, trying to pick laggers and leaders and really trying to spread his risk over a number of markets so that it kind of secures him a bit more of a positive expectancy if overall broadly what he expects to happen does in fact happen. So he's starting the day about 10k down, so pretty much flat for him. And we're just going to play this forward now in real time. So this is coming to the 7 o'clock. And we're going to see, I want you to mainly pay attention to gold at this moment. So 7 o'clock's turned, he's 30 lots short in gold, up to about 100 lots. And gold's just offering hard. I think it's breaking some key reference points there, but he's getting out. You can see him scaling out down to 50 lots from 80 lots or so, laying bids as the market's rotating lower. And he's also entered 100 lots, 150 lots short in SPOO. Now, his initial clip SPOO, I think it was 80 lots short. He's immediately offside. But the fact that gold's offering so hard, we can see the bonds pushing higher. It allows him to kind of give this SPOO position quite a bit of time. Now, this is a pretty heavy position to be 180 lots short in the SPOO and offside. But as you can see, the fact that gold has gone so far, he's now dwindled that position down to only 16 lots. The real kind of expertise that we can see is how he's managed to hold that SPOO position, actually average offside a little bit, but now it's coming back to his initial entry. He's got 100 lots in and he's willing to add in again as he goes onside. And this is something we see him consistently do. Sometimes if all the correlated markets are working in his favour, he will get quite aggressive if he's offside to kind of work his entry a little bit, take advantage of the fact that SPOOs may have just blipped up a little bit purely on the fact that there's been a rate cut, but in fact as the market kind of digests the information and understands that this is largely as expected, we can expect the markets to roll over. So he's now into 240 lots short in the bunds as well. He's currently 80k up on the day, so he's already made 90k from this move. What you'll notice by looking at the bunds is this is outside of the Eurex cash session, so it's very thin, very slow, and really quite a difficult market to trade with a lot of size. But so far, he's bet on initially gold. He got a lot of size in very early and was out quite aggressively. He's only down to say 10-15% of what he managed to get in. And SPOO, the fact that he was quite aggressive and held on to that position in that area as he went offside, you know, that's something that we can all really take from this execution and bring into our own. It's something that I fail at a lot and have been discussing with our elite trader, that sometimes you may have to lighten up if you go offside, but if all the correlated markets are still moving in the anticipated direction, just because you're offside in your one market, it doesn't necessarily mean that you're wrong. And what you've kind of got to be prepared to do is maybe trim your size down a little bit as you go offside, but as you go back onside, as we saw him do, be prepared to get aggressive as you're seeing what you anticipated be confirmed. Don't let the pain of going offside skew your kind of your view of what is happening. You know, you've got to try to retain that objectivity even if you are offside. And what he's done so successfully here is really kind of take a significant amount out of the SPOO, when at one point I think he was 15 ticks or so offside with up to 150, 180 lots, and he's finished with a net positive result in the SPU to put on top of his gold position. Now, what we'll see in the bunds, as I said before, is very thin. The market can kind of get pushed around quite a bit, even as Euro's kind of pushing towards the lows, gold's offering down, SPUs are towards the lows. The bonds have not really done much, and this is kind of telling of what we've seen on that kind of first initial injection of information that we've seen from the initial headlines that have come through. We will see the bonds released a little bit later on, but I just think it's worth noting that out of the three markets that he's trading, being SPU, gold and bund, he had one that went on side immediately and took a really good winner out of. He had one that really made him work for it, and then he's got one that's kind of going against him, but the net result is massively positive. He's up 90k on the move so far. So this is just something that we can all take in that sometimes certain markets work, whether it's because of the positioning or the structure, and certain other markets don't. So by spreading your risk across a number of markets, you're kind of allowing the expected result to be delivered to you in P&L form if you are broadly right. And that's what he's working on. But as you can see now, he's kind of SPU looks like it's done the majority of the move and is starting to kind of drift up from the lows, as is gold. This obviously is not his initial entry that he's just covered in gold. That would be his average entry that he would have dragged down as he'd added more in. So he's kind of out of his gold position. He's actually cut and reversed his SPU position and just trying to work himself out for as small a loser as possible in the bund. Now, what we often see is when we have a move off the initial headlines, we can then see a kind of grinding rotation back towards the scene of the crime into the press conference. And this is quite a good scenario to have, something I'm starting to try and acknowledge as much as I can, because what it effectively says is the market is prepared to sell off, but maybe it just needs a little bit more information from the press conference. And now we're going to see how he executes on one of the kind of key headlines that comes through in the press conference. So I'm going to play the start of the press conference through in 4 times the speed. So again, the same markets that I want you to look at, but broadly, SPU's kind of drifting up a bit, the bonds are kind of drifting up, and it's kind of chopping around a little bit. Gold's not really doing much. In fact, gold being very, very good on the headlines, a lot of the senior traders told me that actually was one of the worst markets to trade over the press conference. So again, this kind of drills into that idea that, you know, sometimes certain markets are good, sometimes they're bad. So you see he's entered a small gold position and a small SPU position, but as he's immediately gone offside and not really seen the follow through that he expected, he's willing to get out and take a kind of quick loser. And this is something that he does very well during these sort of press conferences. He's willing to be quite nimble with his size and be quite small until he hears that one thing that really turns the market on, which we're going to get to in a couple of minutes or so. But I just think it's worthwhile to see that, yes, he is involved a little bit, but he's kind of scrapping around at this moment. He's not getting too invested when he's not hearing anything new. If you refer back to the debrief that I did before, we'll hear that Powell was largely kind of playing down the effects of trade tensions, hadn't really said anything too dovish, too scary, and really just his overall tone is giving this trader a bit of a reason to kind of maybe just have a little stab with a short on the expectation that maybe the market just kind of is ready to roll over again after pulling back and retracing a good proportion of that move. So this is, oh, sorry, 1 second. Apologies. So just so you can get some context of where we are now, in all 3 of these markets, after the initial move, again, T-note, SPU, Euro, we've kind of pulled back and are trading in this area. So back around the scene of the crime. The Euro had actually held an offer a little bit nicer. and wasn't trading up through its opening price for the initial screen dump, the headlines that come through. But just so you got some context of where we are, we've had that initial sell-off and then pulled back. But if you recall how big that sell-off seemed on that initial screen dump that we saw specifically in the SPOO, for example, which is the middle chart, you can see relative to that how big and significant the subsequent move is. And really, as I said before in the debrief, this is one of the biggest moves I've ever seen in the SPOOs. It was absolutely crazy. So really a huge opportunity, and really good to see someone really capitalize on that. So just going back to the press conference, this is the summary of the headlines that were coming through from the presser, and there was one key line which really set the market off. Trump's been referencing it ever since. Fed's Powell says rate cut is a mid-cycle policy adjustment. Now this really goes against the expectation that the market had priced in, that this is the start of an easing cycle. So really the fact that he said that is very hawkish, and given the kind of positioning of the market, specifically the SPOOs being at all-time highs and kind of consolidating in quite a narrow range on the daily, gave it a good opportunity to roll over. So I'm going to put this back to normal speed and just going to watch for the next sort of 5-10 minutes or so him execute in these markets. And I want you to pay attention to the SPOO specifically, the T-notes, and I think he may get involved in the euro as well. So as that comment comes out, first he's in 20 lots short, 40 lots short in gold. And then as that starts to go on side, he can feel the comment getting some traction up to 100 lots short in gold. He initiates a 60 lot short position in SPOO, which he very quickly gets up to size from my recollection. So SPOO took a little bit of time to get going, but the more it started to unfold, the more momentum it got. So he scaled out of a lot of his gold position very quick, from I think 80 lots down to 11 lots. I think that was on a big kind of splash down, but he's up to 230 lots short in the SPOO. So just to recall, his starting P&L I think was around 60 or 70k. And now as this SPOO starts to roll over, the market starts to digest the tone that Powell's brought. It's just a cascading effect now, where the more it rolls over, the more people start to initiate shorts. Potentially the more bigger money that had been long the SPOO starts to cover those positions, and we just see this massive unwinding of long positioning. So just to look at his initial entry is around the 30.08 level. So he's dragging his average price down as the market's showing more and more downside momentum. He's initiated a short position in the euro, as we can see in this top ladder here, of 100 lots short. As I said before, everything's positively correlated, so you want to sell everything. If you believe this is mega hawkish or a big dovish disappointment, you want to sell everything. So he's now initiated a short in the T-notes as well, 240 lots, applying his usual execution strategy, in with big size, then outlaying smaller bids on the prices all the way down. But now we can see he's 140 lots short in SPOO, 90 lots short in gold, 100 lots short in euro, and 220 lots short in the T-note. So by no means maxed out in any one market, but net position 500 lots short. So he's really, and he's onside. So he's onside, and this is where he's so comfortable with kind of just keeping himself in these positions for as long as it's showing that kind of downside momentum. And the fact that this kind of unwinds and starts to build up more and more acceleration, or starts to accelerate more the further it gets down, really just looking at the SPOO now is the main market I want you to pay attention to, because the bonds don't really go. Yes, he makes some money in them, but really the SPOO is where the real meat of this move occurred, or potentially in the gold as well, but as I'm not as familiar with that, I really want to focus on this SPOO move. So you can see every time the SPOO's making new lows, we're seeing new sellers coming to market. You can see, every time it pulls back, you've got kind of the offer kind of restacking lower and lower and lower. And just the nature of this price action across all these markets is showing something significant's happening. The bunds have offered 20 ticks from the highs, T-notes are on the lows, Euro hasn't really released yet, but I think if you recall from the charts, it was the one market that kind of held a bit of an offer into the press conference and maybe not as far to go. But actually, I think, you know, if I was to speak to this trader, he never would have anticipated that the SPOs would have gone quite as far as they did, because obviously you would want to maintain as much size as possible. But anytime it's making a new low, pulling back and holding, he's prepared to add back into that trade. As long as he's seeing the kind of real volatility and kind of decisive intent to every market to be to the downside, he's willing to stay with these and then get more aggressive as a new flow starts to come in. So he's up 190k on the day so far, still net short 390 lots across the 4 markets. Hasn't really taken much out of his Euro position yet, as it hasn't really released. But remember, this is all in real time, so it was quite crazy. As we'll see what happens in the SPO shortly, it really, really releases. It absolutely pukes. And it's kind of good to get your eyes on this sort of price action. For me, you know, I'm going to watch this as much as I can, because when it does happen, you have this little thing that happens in your head where you're like, I'm seeing something a little bit different here. This seems a little bit nuts, a little bit crazy. And when you see that, you want to make sure that you kind of give yourself as much risk as possible, as long as you're seeing the move play out. I.e., if you go on side, you want to be holding this position until you see a real kind of exhaustion and a clear reversal across multiple markets. So you can see his position's relatively small now in the SPO. He's down to 24 lots. But this is where it had made its first move down, it had pulled back, and it was just kind of consolidating and thinking about what it was going to do. Were any buyers going to step in? You know, if you recall from where he started, it's only down 10 handles or so from where he initially entered, where that comment was initially made by Powell about this being a mid-cycle adjustment. But now we can see the SPO just pushing lower and lower and lower. And as it's about to make a new low, he just gets another 20 lot clip in. And this is always something that he'll do. And he doesn't mind kind of scaling out a 10 just as it pulls back a little bit there. But it's just something that if the market's showing intent that it wants to make a new low, he wants to make sure he has a little bit more size on. And just by making that habitual in your execution, you start doing that across multiple markets, it keeps you in these trades just a little bit longer, because then as you're scaling out, as the market's rolling over, you're only scaling out of what you'd added in before the new low was broken. So you're kind of maintaining that core position for a longer period of time. And with these sort of trades, a lot of it's just about staying in. You know, if you're not seeing these kind of drastic pullbacks, which you often see in the SPO, it's a real indication that the market can't bid up and that something different's happening, because usually by now you would have seen kind of 3-4 handles kind of pulling back. So SPO's just starting to release now, and you can see he's made the decision, right, I'm going to lump in towards these lows here, just added up to 80 lots as it made that low. It's having one last squeeze where he's willing to scale up back to sort of 30 lots or so. So kind of took a bit of a loser there within this trade, but he's still in all of these. He's actually offside in the Euro, he's at his opening price in the T-notes, and he's offside with 70 lots in gold. But as you recall what I said earlier, gold wasn't really the best market to trade in this big move that occurred. It was a bit of a chop. But we're starting to see now the SPO just making another new low. And every time it does that, it kind of adds to your conviction, or it should do, in the fact that you would have expected everything to kind of come back a little bit by now. So he's up 140 to 145k on the day. But really, we haven't even seen the massive kind of part of this move start to happen yet. So it's about 8 minutes or so since he initially entered, we had that comment from Powell, and he's still in the trade and he's still waiting for that kind of real flow to come through before he gets aggressive again, and we'll see him start adding across multiple markets, putting more size in. So SPU's just made a new low, he's having another pop at adding in. Gold starting to come back through his average entry after being quite far offside, a good 20 ticks or so at one point. So I appreciate that a lot of you watching, you may be in a similar position to me, that we can't necessarily watch like 4 markets go offside 20 ticks or so with size, but you know, you can apply similar execution strategies across 1 or 2 markets, and you can do it with a reasonable size where if you've really kind of done your preparation and had a look at what markets have the best structural kind of capability to release in the event of a real kind of disappointment, i.e. a hawkish move were to play out, then you know where you want to allocate your risk. But I think what's evident here that we can just take from this is just by staying with the trade opened up the opportunity to recognise the positioning, particularly in the SPUs, and that there was the potential for that big rollover if it really got going. And then also, you know, the bonds didn't really go, but the bonds are at all-time highs. So it's kind of, it makes sense to be involved in that trade. So, I mean, this actually takes longer than I realised when I was watching it. It felt very fast as it was happening, but I guess you're kind of listening to Powell talking at the same time, which is why it kind of makes sense not necessarily to be holding massive positions in all of these markets, just because at any time Powell can say something a little bit contradictory to what you've interpreted from what he'd said earlier, and everything can kind of reverse. So you've got to be quite tentative, got to be quite kind of astute to what you're hearing, and be ready to kind of, you know, cover or cut and reverse in the event that you do hear something that goes against your current positioning in the market. So he's kind of dwindled all of his positions down to 190 lots net short across these 4 markets. But everything's kind of holding towards its low. You can see Euros pretty close to its low. Gold, he's back on side now after being offside for a good kind of 5 minutes or so. T-notes is up towards his initial entry and didn't really release that much. There's still potential for the bonds to roll over, but really you want to be focusing largely on the SPU, gold and currencies for this kind of FOMC stuff. They seem to be the best markets to move. But now, as the SPU starts to roll over, you know, it's only down 20 handles or so from where it started at the moment. So relative to the overall move that it does, this is just kind of the start. It's only 20% done or so. I think it does, or maybe 30% done. I think it does a good kind of 60 plus handles. But I'm actually going to speed this up a little bit because it's going a little bit longer and I'm a little bit stretched for time. So let's go to 2 times. This is double speed now. You see, as everything starts to go on side, 120 lots short in the SPU, up to 300 lots short in the T-notes and 100 lots short in the Euro. You know, he's let his gold position kind of deplete to around 12 lots, but this is where everything really starts to release. I want you to take note of his P&L. He's up to 250k up on the day now. You know, kind of letting the T-notes just do their thing as he's really focusing on, you know, gold and the SPUs at the moment and the Euro. Only laying bids, you know, a few ticks below to start working out of his T-note position. But as everything really starts to roll over, the fact that he was already positioned meant that where he was adding in, it bought him just that little bit of protection for that first bounce, so that when it released, he didn't have to scale out of anything more. He's just loaded up his gold position a little bit more to 60 lots. He's just breaking 300k up on the day. And this is where the spoo starts to get a little bit silly. It just starts to bucket out. It just seems like it's a bit of a domino effect and just starts to cascade. And you know, it's the first time I've seen anything like it, where it just keeps going, and then you get these massive flushes to the downside starting to happen. You know, we've just done sort of 10, 15 handles in the past couple of minutes. Up 340k, 350k on the day now. You know, net position below 300 lots or so. So he's out of most of it. But really still working these 4 positions very nicely. T-notes is down to about 60 lots. Euros down to 60 lots as well. SPOO's only down to 15 lots or so. And gold is still in about 50 lots. So probably still thinks that there's a little bit more room for gold to do. But it actually starts bouncing quite hard. He's kind of chasing it a little bit, trying to get out. So he's largely out of his SPOO position. He's up 360k on the day. And really just want to fast forward the rest of this in 4 times the speed, just so you can get eyes on what this is. So this is about half an hour of footage that we've seen. But you see, after that big flush, he doesn't get too involved. As the market then starts to chop and bounce a little bit, he's very good at not then getting caught up massively in the chop afterwards. I mean, he may get involved if he hears something, but you know, as a general rule of thumb, what we see from this trader is him deplete his size, you know, and start trading smaller size relative to what he was trading before, after he's had a really big winner. So, you know, I'm going to leave you with that. I know there's a lot going on. It kind of boggles my mind a bit sometimes to think how you can kind of focus your attention in 4 different places so kind of intently at one time. Just trying to do it with 2 markets can be, you know, a bit of a kind of tough challenge for the brain to do, but you know, it's just a real good example of some amazing kind of flow execution across like a group of correlated markets during a news event. So hope you enjoyed that, and hopefully we'll have some more examples of our elite trader executing in a similar fashion sometime soon. Cheers, goodbye.